Hello and happy Monday. If anybody woke up today, they probably woke up to a lot of like markets crashing. Crazy day out there today. I'm looking at my portfolio and I'm going, why the hell do I buy stocks? But it's one of those days. It's Monday. It's another week coming to the end of January. Craziness hits this year. I mean, I think 2022 was kind of the revival of like the real 2021. But 2022 is ending up kind of being like a 2021, if that makes sense. But we're here every Monday. So Ashley is out again today, this week. She's got some vocal problems, issues. So it's just me. You got just me. So hopefully you're happy. You can clap too. Yeah, see. Everybody around here loves it when I'm by myself. But I'm here to talk about housing and the things we got going on. So every week, Rob and Morales, RCO Network, every week we bring you the Phoenix housing market, stuff that's happening on in your neck of the woods here in Phoenix. What I wanted to bring you today, again, the big headline really is more about stocks and investments. And I've had a couple of questions this morning just watching the news. Is it time to buy a house? And the question is possibly, or it's nearing the time. I mean, it's really a challenge to predict, I think, in this market. Hi, Ramona. How are you? It's really challenging in this market because there's so many things that I want to say that are positive, but there are some very realistic things regarding how this market is turning and what we're doing as far as housing goes. I don't know is really the big question, but there are some numbers and some stats that we can kind of reference and get an idea of where this market is going. I will start with, I guess we can get into stocks a little bit. So as if everybody was watching their portfolio this morning, I think mine was down another 10%. It's been going down for the last like 2 weeks. Just people have been selling off, and people who are selling off their, those financials, that part, the paper stocks, they tend to go to hard assets. And so hard assets are, commonly gold, commodities. Right now it's cars, even used cars is kind of crazy. But real estate is one of them. And so one of the things that I pulled and I wanted to look at is just general markets and kind of see where people are putting their money. And so if I go to that screen, so these are our markets. And I'm looking the most popular stocks today. Macy's, Home Depot, Under Armour, Chipotle, and Nike. So does anybody see a common theme here? People are kind of gravitating towards clothing. People are investing in clothing.
Shoes.
And shoes. Nike. If you really like Nike, Nike is a place to park your money in. Angela's over here saying shoes. But then you also have Home Depot and Chipotle, which is, home goods, obviously building materials, that sort of thing. And then you have Chipotle, which is food. You would think it'd be like grocery stores like Kroger. Kroger was doing really well for me as far as a stock goes. I sold that off just before they were kind of selling off too. But it's kind of funny that people are moving or gravitating towards clothing, Home Depot, and food. The very basic needs, not technology, not some of the things that people are spending their money on. So scrolling down a little bit more, the top gainers for today were, FedEx, shipping, Dollar General. I mean, obviously people are trying to save money out there. Best Buy, don't know why. Marathon Oil and Occidental Petroleum Company. So gas. So really gas and clothing and, very basic needs outside of housing. So, the funny thing is with the stock market, it's never a strong reflection of how the housing market's going to be, but it's also kind of one of those things that people look at because it's immediate. When stocks are going down like the Dow or the S&P 500, when you see these things going down, it's like, well, is housing next? Is really the natural kind of question. Potentially. I don't see it here. When you look at national numbers, there is some optimism regarding national numbers, but when it comes to Phoenix, it's a little bit obscure. Ramona said the shoes for the divas. Is there any divas here, Angela?
Yes, of course. All of us, we are divas. All of us, we love shoes.
I think Angela's a diva. But that's for another show, miss.
And doesn't matter how the market goes or what happened, we are going to still biting shoes.
Oh boy. So Angela's in the back end. She's kind of monitoring things and answering questions as we go along. But again, going back to housing, that's one of the safest assets that you can really invest in. Long term. Even if there are dips in the market, the 2009 debacle and things that crashed out, it took relatively about 5 years to recover those gains. And so housing in itself tends to be a very stable asset to invest in, and I'm seeing that in the market right now. I'm seeing that in Phoenix. We listed a house last week and a half ago, and we got an offer even before we went on market. As we went on market, we were accepting the offer, which is kind of crazy. And that house was almost $600,000. And it's just a weird market. People, I believe, and again, I'm not a financial planner or advisor, but I do kind of monitor these things for myself. I concern myself with where my money is going. I think just like anybody else is, how much are they, where is it going to go and where is it going to be in the next 5 years? And when prices of, goods goes up and when, people are losing money just to food, it's a concern. It's where do I invest my money so it's going to make it grow and not devalue over time, which is what inflation is doing. Angela says she loves shoes. So I did want to point out, though, as I'm looking at the stats a little bit, we watch the demand index. We watch it every week, and that's right here. This is the overall market in Phoenix. We're in a very high demand kind of arena. Really, the market index is a reflection on anything above 100. So right now we're about 450 as a seller's market. We are significantly in a seller's market. There's very little, we are far from being in a yellow balanced market there. So having a market index of 100 means we have a balanced buyer seller. That means you can go find a house and really negotiate the terms of that scenario, that situation. You could discuss a little bit more about giving credits and all that stuff. And that's an environment where it's balanced. You can actually do that. Right now, you cannot do that whatsoever. Where did my face go? There it is. Covering up the index. So demand index is very high. There are some opportunities. I didn't really get to portray those. I was actually fishing around this weekend and found some smaller opportunities. One crazy thing. I'll pin that for a second. So I want to finish up with this part, but the market index is indicating it's a seller's market. Demand is still very high, and supply, as you notice, it's green. Green does not mean good. Green is just low supply. It's fueling this demand index, which is also making it a seller's market. So we are nowhere near having the ability to negotiate, a sale, unfortunately. So people out there who are buyers, it's a bit of a challenge still. There's still some opportunities. The odd thing, the one thing I wanted to mention when I had that slide up, Arizona City. Arizona City is an odd community. It's right in between. Well, it's not odd itself, but it's just odd in its placement and the aggressiveness of the offers that I'm seeing. I was helping a couple out there a couple weeks ago. They decided to kind of stop looking. You have Nikola out there. You have a couple other, factories and warehouses and things going on. I believe there's this Walmart warehouse out there that does all the shipping in Phoenix. But what's interesting about Arizona City is that it's still a low price environment and it's super competitive, way competitive. And I would think an area like that, there would be more room for opportunity, but there isn't. There's houses out there that were literally 4 years ago selling for just under 100,000, and now they're selling for just over 300. So, I mean, there's really no market in Phoenix or anywhere close to that is even a potential buying area. Mesa has a little bit less demand. They're almost at a balanced demand index, but really there's no safe place out there for a buyer, unfortunately. So I did bring this up before, this chart. Let me bring it up. And one thing that we discussed on the show was let me get my face out of it. The supply index. So the supply, every one of these peaks here, as you can see, every one of these peaks here represents January of every year. This is the viral thing. So we had a little bit of a slowing in the market, and so we had a little bit more supply that 2020 year. But this was last year. This little tiny peak was January last year. And I told you guys last week and the preceding weeks that if our supply were to kick up in the third week of January, we would see kind of a more balanced market. But as you can see right here, this is the third week of January, and we're at the same level we were last year. So unfortunately, my prediction, and again, it's just a thought, it's just a process. My prediction is that prices are still going to be elevated, still be very competitive. And with that demand index, low supply environment, buyers are still going to be priced out. Our median price point right now is about 460. So unless you're looking above 460, there's really no market. There's really no price point that is serving for any buyer right now. So just know that whatever offer you're making, I'm starting to see appraisal shortfalls. I'm starting to see appraisal contingency waivers again. That was kind of minimized last at the end of the year. Appraisal shortfall means that whatever the house appraises at, you're offering just above that. So I had a situation this last week where we made an offer for $5,000 above the appraised price. That's an appraisal shortfall. So if we didn't, the offer that we made didn't appraise at the price we offered, then at least there's a buffer for the seller to accept and get over the asking. But I'm starting to see all these things again. I'm starting to see agents not call back. You know what? Excuse me. When I made an offer, I made an offer on a house in Maricopa this weekend too. Didn't hear anything from the agent. Usually you want to call and start a rapport, have a good relationship, kind of feel the other person out and see if they're going to actually finish the deal, get it to the finish line with you. And I really didn't get any calls back. And the only call I got back is, hey, we accept another offer. I'm sorry. And I'm starting to see that again. You know, unfortunately, we're just not an environment for buyers. Sellers, let's see, Angela, I heard the rates are going to go up soon. Should we get into a rush to buy? We will talk about that in a second, Angela. I promise that. We'll talk about those rates. But as far as sellers go, this is the best time to sell. I mean, that's really, you're getting top of market. You know, as interest rates go up, which is going to highlight things, that's the one thing, a concern that a seller needs to take into account is interest rates. Whether or not a buyer is going to be able to qualify by the time we get to the finish line. Since I'm talking about it, I guess I'll pull it up. So the 30-year fixed rate is where everybody's kind of focusing on. And literally in a month, in a span of 3 weeks, let me put this up. In a span of 3 weeks, we've gone from a low 3% interest rate environment to now almost just below 4, if not over 4. And this is for credit scores, or, you know, better credit scores. So people who are FHA, I think people who are FHA are kind of priced out right now. But FHA minimum, I think, is 640. On an FHA, around 400,000. You're looking just at 4.5%. So in a literal month, we have gone up a point, maybe 1.25 points. So does that influence the housing prices? Absolutely. You know, as interest rates go up, you know, it brings people less qualified. But in this environment where there's short supply, I'm not seeing it really affect anything. And so they're really trying to pick up interest rates so that it slows people down from purchasing, which will hurt eventually sellers, just not today. I don't foresee sellers being impacted by interest rate hikes until at least March, if not June later this year, just because of the low supply. We need supply. At the end of the day, we need more houses. We need people to sell more, and we need less buyers. You know, and less buyers isn't going away. But at least if people are more primed and more excited about selling and wanting to maximize and get as much as they can out of their house, you know, we need more of those. But that's not happening. And another indication too, I'll bring up one more chart as we're talking, because we're at 14 minutes. I'm going to try to keep it at 20 minutes a day. Just a quick update, not the full 30, because I think people want to get on with their day. The contract ratio. So this is kind of comical, right? Get my face out of there. So contract ratio, if you look at here, this is in January this year. Pull that up. So the date is 1/1 of 22. So under contract, we have 8,900 homes. So 8,900 homes under contract. Active listings are 5,000. We have more houses in contract than we actually have houses to sell, which is, again, one of those things for a buyer that is not necessarily the best of information. As you're out there looking for houses, you're in a high competitive environment. Again, 2021 is repeating itself from what I'm seeing in 2022. It is just craziness. And I don't see an end in the near future. I mean, I want to be optimistic and say that these interest rate increases will bring more inventory, bring more listings to the market, but I don't necessarily see that, or at least slow it down a little bit. And people who, I will say, nobody cares about interest rate if they need a house, if they need a place to live. And so they will be competitive. They will do things to make a higher offer just to be in a house, because a house is a different asset than just a car or just, you know, a random thing. This is a place where people live. This is a place where people invest. And there's so many things, so many emotional connections to a house that is not just some random thing, And so people will definitely put more money in. And I don't necessarily see a crash. I think people want to have that news, the news that they want to linger on and hope for, like, hey, I'm going to finally have a place to buy. I don't see that anytime soon, and I want to. And this is not a good environment for any agent, for any realtor, for any lender, because it just brings out the stupidness. I had another client today call, and he is wanting to find the lowest interest rate out there. And shop around and do what he needs to, but there's so many lenders out there that are just. I want to say there are some genuine lenders who are willing to help. That's who I connect with, but then there are some people out there that really just say and do things that aren't really, I believe, ethical. So if there was a cautionary tale to be told, it's that, find somebody that you trust, that you can trust this investment in. That's the challenge, is that there's so much. I want to say FUD, fear. Uncertainty and doubt, that people will say and do things just to get a deal, and it's unfortunate. It's just an unfortunate part of the environment we're in. But it's so competitive, people will step on each other's toes just to get a deal. So the thing again is to be conscientious about is who you trust, and that really what it comes down to. But just know, as a buyer, it is crazy and it is competitive and it's not slowing down. So I wish I had better news for you, for buyers. For sellers, I'm encouraging all sellers. I'm encouraging everybody to sell their house. That's the only way buyers are going to have a chance right now, is for more listings to come up. That's the end of it. Rentals, on the other hand, if anybody's looking to rent, that's not pretty either. I thought I pulled up the numbers today. Renting right now, let me see if I can, actually, I think I do have it. Hold on one second. Let me go to them. And I'm pulling it up right. And now. So renting isn't a pretty picture either. My head's always in the way. So renting isn't a pretty picture either. Median price of rent right now, the median lease price is $2,000. And I want to say that is a 3-bedroom, 2-bath. That's a common 3-bedroom, 2-bath. The average lease amount is $2,200 a month. Again, if looking at the last year, I've seen prices of rentals go up anywhere from like $400 to $600. So the takeaway from this is, if you're in a position where you need to find a rental, it's also explore the ability to purchase too. So having more options is better, not only on the rental side, but the purchase side. It's not a pretty picture for buyers, but at least if you have the option to buy, or at least working with a lender, you can increase your credit score, you can increase your financial portfolio, so that you can be a better candidate for a rental, if not a purchase. You just need more options at the end of the day. That's really what everybody needs if they're in that position and they need to find a new lease. I'm seeing a lot of landlords discontinuing their current leases in order to gain that extra $500-$600 a month on that same rental. Oh yes, that's the reason we all need anybody to trust, Angela. So if there's any questions, go ahead and drop those in too. Like I said, I'm probably gonna be cutting things a little bit early, but it's not looking pretty in the rental market either. You can see the trends here. Again, average days on market is about 24. So if a rental is on for more than 24, there is some room to negotiate the rental rate. If it's less than that, I mean, and if it's a good home and you have a good credit score, then yes, absolutely. Ramona says 2,000. That's more than a mortgage. Yes, absolutely. And that's where I think people need to explore their options a little bit, because it doesn't make sense in this rental environment. I will say I just purchased a house. I like to talk about my situations without revealing too much, but I did purchase a house. Our mortgage payment is $2,300 a month, and I'm seeing houses out there for a lot less and for less bedrooms that are renting for more, which is unfortunate. So if you're in that ability, if you know somebody, especially if you come across a situation where you can pay under $1,600 for anything a month, I would say take it. I got asked if there was any rentals in the East Valley area for under $1,600. There was 2, and I think there were 2-bedroom, 1-bath. So again, if you I think the best thing is to open yourself up to as many opportunities as possible. get to know real estate agents, get to know lenders, get to know the industry, our people in the industry, as many as possible, because again, you'll come across somebody that does have a rental or somebody that does know somebody that's coming on market, may have some inside information about a listing that's coming up. Anything you can, anybody you can reach out to just to kind of see where they're at and what they know. I think that's the best opportunity right now. But for buyers, it is somewhat dismal, and I wish I had better information, and I wish I had better predictions. But that's just the way it is. And if anybody doesn't have any questions, I think I'm gonna end it there today. But in the future, if you have any questions regarding the Phoenix market, if you have anything up that you need to talk about, if you just want to shoulder to cry, I'm here too. Right? No?
Yes.
Oh boy. So what did we learn today, Angela? Did we learn anything?
We learned a lot, as always.
Yes, we learned a lot. And so if you need more information about anything, go ahead and reach out. Rob Morales here at RCO Network. You can go ahead and drop a line in the comment section. You can go and IM us on Facebook. We're here on LinkedIn. We're also on YouTube, so that video will be uploaded soon. So if you have any questions, reach out. That's what we're here to do. We're here to provide information and support you, supporting us to support you. Something like that. Until next week. Ashley will be back next week. See you guys.